Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph and I store 20% of my income in the form of rare coins and precious metals. Every Saturday I've been taking a look at the weekly closes of gold, silver, platinum, palladium, and copper. So this Saturday we're going to take another look at these weekly closes. Many stackers have already identified that we're in a pretty strong pullback, and it's not until you understand how these metals move compared to each other that you can see the pattern starting to form. So let's take a look. Congratulations to Trenosaurus for being the first to comment on yesterday's video. Thank you for the support. Y'all go down into the comments to find him and start a conversation. So here's where we ended this week. Gold closed at $4,710.80. Silver closed at $75.81. Platinum closed at $2,022. Palladium closed at $1,524. And copper closed at $5.9862. And if we compare this to last week, every single metal is down. But what matters more is not this that they dropped, but how they dropped relative to each other. So let's break it down. Gold is down 2.5%, silver is down 6.1%, platinum down 3.1%, palladium down 1.6%, and copper down 0.9%. And right away, something that stands out is that silver dropped the most, platinum dropped more than gold, and palladium less than gold, and copper barely moved. So let's start with gold. Gold did move down 2.5%, and that is a pretty significant drop, but in context, it's actually quite controlled. Gold is still doing what gold does. It moves slower, it holds value better, and it acts as an anchor in the entire metals market. So when we see a week like this, where everything is down, gold becomes a baseline. Everything else moves relative to how gold did. Now, silver. Silver dropped 6% this week, and that's more than double gold's movement. And that tells you something quite important. Silver is still the most volatile metal in this group, and that volatility comes from its identity. Silver is partially monetary and partially industrial. So when sentiment shifts even slightly, silver reacts fast and aggressively. And here is where most of that movement is probably coming from. This looks like it's risk coming off the table. When markets get uncertain, investors pull out of the higher volatility asset first, and silver usually gets hit harder than gold. So this isn't just a drop, it seems like it's more of a shift of confidence in the short term. Then we have platinum, which dropped about 3.1%, which is more than what gold did, but less than silver. And that places it right in the middle, and that makes sense for platinum. Platinum sits in a very specific position. It has some monetary characteristics, but it's heavily tied to industry, especially the automotive demand, catalytic converters, and manufacturing. So when you see platinum drop more than gold, that's usually a sign of industrial pressure. Not panic, not speculation, just slowing expectations. Then we get to palladium. Palladium only dropped 1.5%. And while that's less than gold, be careful calling palladium an even more stable asset, because palladium usually drops significantly more. So why would it be that palladium didn't fall quite as much as gold? Well, if we zoom out, we can see there's a very simple answer. It just fell earlier than all the other metals. In this chart, you can see that palladium was falling through all of March. And in this chart here that I've created, tracking all 5 of these metals by percentage gain or loss since about mid-December, you can see that the recovery that happened in mid-February didn't quite show up the same way in palladium. Before I dive deeper into that chart, let's talk about copper. Copper is down less than 1%, so basically flat. And this is one of the most important signals in the entire market right now, because copper isn't driven by speculation or safe haven demand. Copper is driven by construction, infrastructure, and economic activity. So when copper holds steady like that, it tells you that the real economy isn't collapsing. This is a strong signal, especially compared to these metal market signals. I do want to bring back up this chart that I have made. This is the metals weekly closes represented by percentage movement since December 19th. So you can see they all start at 0 and have relative movement to each other based on the weekly closes of each Friday evening. So when we're looking at this, at least for the past 3 months, we can start to see a bit of a pattern show up. If you look at the yellow line for gold and orange line for copper, those seem to be a lot more horizontal. They're way less volatile. Now, if we look at the blue, gray, and green line, silver, platinum, and palladium, you'll see that these are way more volatile. They move upwards together and downwards together. It's just their difference in volatility puts them in a completely different ending spot. And here you'll see that platinum looks to have zeroed out or effectively moved horizontal over the past few months, while silver seems to have performed the best and palladium performing the worst. And what's interesting right here at the end is it looks like copper has slightly taken over gold for just the time being. We can see that looking at it this way in percentage of change, especially week by week, you can see how the metals perform versus one another. Looking at just the price, all we're seeing is daily, or even if we're looking at it weekly, some weekly movements. It's not until we start to see percentages and long-term movement that we can see which asset might be better for us. So, me personally, I'm going to continue to watch them in this way. I'm particularly focused on, does silver continue to lead the downside? Does gold continue to hold stronger? And what is copper doing right now? Looking at it at just the price, it's easy to look at what went up and what went down and try to react to that. But that's not really how I approach this, because I'm not looking at each of these metals as a separate trade. I'm looking at it all as one portfolio. And within that portfolio, each metal has its role. Gold is stability, silver is volatility and upside, platinum and palladium are more tied to industry, and copper reflects the economy. So when one metal moves more than the other, it's not just a price change. That's a shift in relative value. And over time, that's where opportunity comes from. So when I possibly trade between metals, and I don't mean day trading or timing the tops and bottoms, I just mean consistently buying and selling and possibly trading over some ratio in the time that it makes sense. When one metal becomes relatively expensive compared to another, you can slowly start to shift some value. For example, if silver runs up much faster than gold, maybe you convert some of that silver into gold. Or if the gold to silver relationship stretches the other way, you might even go back. Not all at once, not trying to time it perfectly, just small adjustments over time. Because the goal isn't trying to beat the market week by week, the goal is to increase your ounces over time. And weeks like this are very important, not because they change your entire strategy, but because they show you how each metal behaves, where the volatility is, and where relative value might be shifting. So instead of reacting to that day's price or even a single week's movement, take a step back. Ask yourself, what has moved the most? What has held the strongest? And how does that affect the balance of what I already hold? And remember, I'm not a financial advisor. This is not financial advice. You shouldn't be taking what I'm saying and directly apply it to your situation. Everyone has a different risk tolerance, time horizon, and financial position. Your positions and tolerances will be very different than mine. But if there is something you could take away from all this, is to not think of the metals as so separated from each other. Think of it as terms of managing a metals portfolio, because over time, that's where consistency and real progress comes from. I just made my own line of coffee. Joseph's Reserves It's Today Again coffee. Most mornings aren't dramatic. They're quiet. You wake up, pour yourself a cup, and now you have a choice. Drift through the day or take hold of what's in front of you. That's really what this whole thing's about. Showing up, building good habits, staying disciplined in the small things. Whether that's stacking consistently, learning something new, or just being faithful with what you've been given. I put these words on every bag to remind myself first. Every morning is a gift. Not yesterday, not tomorrow, today. So take a breath, take a sip, and let's get to work. It's today again. You can now write me at Joseph's Reserves, 10160 Highway 242, Suite 800, number 401 in Conroe, Texas, zip code 77385. Make sure to include your information so I can write you back. If you like today's video, make sure to hit the thumbs up button, go down into the comment section to start a conversation or continue one. Share this with anyone you think may like it, and subscribe if you haven't already. But most of all, thank you so much for watching, and just remember, every ounce adds up. So no matter how small, just keep stacking.